Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we had started our discussion over the Banking Regulation Act, right? That's what we have been discussing for last some lectures. All right, and we have discussed many provisions which have been provided or enumerated within this act so far. Okay, so basically in the previous lecture we had completed the control over management provision, okay, in which we had discussed about the board members and other things. I hope that you revised that thing before you have come for this lecture. As I have told you, or you can say as I've reminded you, it is for your own benefit. All right. So right now we are going to start with another important provision which has been provided in the Banking Regulation Act 1949. So let's start. So basically in this lecture, we are going to discuss the audit and inspection. Okay. What are the audit and inspections provisions provided in the BRA? But before starting with this topic, let me make sure that you know what is the meaning of audit and what is the meaning of inspection. All right. So there are two terms I have provided you. What is the meaning of audit and what is the meaning of inspection? Mostly time we you can say often, not mostly, even you can say often, we describe audit and inspection as the same thing generally. Okay, but as we know that we are going for a competitive exams, we are going to have a face-to-face battle with the examination. That's why it is very important that we should be able to describe these things in a particular manner. All right, so let's first start with the audit. What do you mean by the audit? Okay, so basically you can say audit is a practice of assessing the compliance with set objectives along with you can say formulating the clear picture of the situation. Okay, practice of assessing the compliance with set objectives along with formulating the clear picture of the situation. Okay, let me give an example. Suppose this is you. Okay, you have rupees 20,000 with yourself. Okay, you said I would save rupees 5,000 as my saving. Thereafter, I will invest rupees 2,000 somewhere. All right, and this amount becomes rupees 7,000. Okay, and then you say I will expend rupees 13,000 on my every expenses. This is the plan you have made. All right, but when the month will get over, then how will you come to know that you have done these things? By assessing the expenditure, by assessing the transactions you have made. All right, so this is the audit of your month. Okay, have you saved this much? Have you invested this much? All of this money, where they go, and this and that. All this kind of things comes under audit because now you are assessing the situation. All these things which you have write down after receiving 20,000 are just a figures. Okay, or you can say are just a purposed figures. Like I have to do this thing. Okay. But in the month end, suppose in the month end, when you assess the transactions you have made, so you found your saving are just only rupees 3,000. Okay. You only invest rupees 1,000. It means that your total monthly expenditure was nearly about rupees 16,000. That is the clear picture. Okay. And this picture is formed after the audit. Okay. That are the purpose figures. That are the real figures. Okay. So basically, audit is assessing the transaction, assessing the files to know that whether you are doing the right thing as you have decided or what is your current situation. Okay. So in this scenario, we had made a target for rupees 5,000. We had a deficit of rupees 2,000. We had made a target for 2,000. We had deficit of 1,000. Okay. We had proposed the target for rupees 13,000 and we had done the excess of rupees 3,000. Okay. So when you have the clear picture in front of you, you can make the changes, right? That's why audit it is very necessary in the banks, even in the corporations, whether they are doing as they had planned. Okay. To know the clear picture. All right. That is the audit. For banks, generally it's happen when the various files from various departments are being accessed, okay, or by being assessed by the experts, clear cut the transactions and all the things going on. Then the you can say the authority or the top management of the bank will be able to understand whether they are standing. Okay. Thereafter, next term, what we had discussed. Okay. Some points regarding audit. First, note them. They are less frequent or generally happens once in a year. Okay. Because they are covering the broad coverage. Okay. Right now, I had provided you the example of an individual only. But suppose in place of individual, if there would be a bank and the bank had a target to grant the loans, to make the investments, to invest in the government schemes, to purchase the bondings, okay, and to accept the deposits, to launch various other services to the customers. Now you can see the scale is very large. Okay. And after a certain period of time, when the bank will try to set out the clear picture, like what they have done in the past and what is their current situation now. So they will try to assess each and everything they had done. Okay. So now you can say they have to assess the various things they had done. So it will be a part of an audit, and that's why I'm saying that it having a very, very broad coverage. Okay. Because you have to analyze each and everything you have done. All right. And that's why, because it is a time taking process. So you could not do it in a short period of time. That's why it is less frequent or generally happens once in a year. Okay. Now come to the second point, which is the inspection. Okay. So you can say inspection is not so different from audit. Okay. Or you can say it is a part of audit. Okay. It is a part of audit, and it is basically the practice of assessing the things and forming out of picture as per special condition. Okay. Like the audit is generally happen for everything. Okay. For every each and services. But inspection is generally happen for a special condition or for a special kind of department, you can say. Suppose if the bank had set a target for sales department to generate a revenue for rupees 10,000 crores in a year. Okay. But somehow they had already generated 8,000 crores revenue. So there is a deficit of rupees 2,000 crores. Okay. So when they will try to assess this thing, then this will call an inspection, because now it is only for a special condition or only for a sales department. Okay. So inspection is generally done for some special cause, not for a general cause. Okay. And that's why it is having a narrow coverage, as it is not doing for a regular cause. Okay. And for a special cause. Second, it is frequent than audit, because in audit you have to assess each and everything you are doing, but in inspection you have to assess only one or two, or you can say only the special causes. That's why the inspection is frequent in comparison with the audit. Okay. So now I hope you have got a clear picture about the audit in the inspection. What is the difference between the audit and the inspection? Okay. Now let's move forward. So the first provision we have is a regular audit. Banks are required to conduct regular audits, typically on an annual basis, to assess the accuracy and reliability of their financial statement and transactions. That's what I had told you already, on the annual basis. Okay. Because when the banks operate, they had deposit services, they had investments, okay, they had loan granting, all right, they have to purchase and participate in government securities, all right. Now these are only the broad coverage. When you divide them in deposit, there are many types of deposits. In investment, there are many types of investments. In loans, there are many types of loans. In purchase and participate in the government securities, there are various types of government securities presented to the banks. Okay. So because during the audit, they have to cover all these things together, to inspect them properly, to draw out the clear conclusion what is going on, what is happening actually with them. That's why they require a regular audit, and the audit is generally conducted on annual basis, because it is not only a time taking process, but it's also a very comprehensive process. Okay. Suppose in the year from January to December, it is a calendar year. Okay. And what is the financial year? What is the financial year? 10 seconds you have. I have told you many times, and now it's a question for you. The time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. Time's up. So the financial year is basically starts from April and ending at March. It is known as the financial year. Okay. So just know this thing. Clear cut? Okay. So suppose during the time period, the bank had an objective for rupees 15,000 crores to make the loan, okay, to accept the deposit, to invest in the government securities, or to invest in the private corporation, finance, export, import, whatever they are planning. But they had a plan for rupees 15,000 crores. Okay. So now you can say that there is a particular time period, because if you are going to assess this thing, then you have to consider all the factors related with it. All right. So you could not say in the middle of the year or in the quarter of the year you will try to assess these things, because you won't get a clear cut picture. You have to consider all the facts and figures involved in this particular area. All right. That's why these are happened on the annual basis. Okay. Not on the you can say short term basis or short time basis. because they are not only a time-taking process, but also a very comprehensive process. Okay. To assess the accuracy and reliability of their financial statements and transactions, external auditors, often chartered accountants, are engaged to carry out these audits. They provide an independent and expert review of the bank's financial records. Okay. So now the question is, if someone asks you, can you please tell me why the bank's audit is very, very important? Why? So generally, there are only the few causes which could be explained in a particular way. The first is to protect the depositors. Second is to protect the customers. And the third is to protect the economy. Okay. Because as long as we are not aware about the actual condition, or you can say actual prevailed condition of the bank, what is happening with the bank, we won't be able to form out the clear cut picture. All right. Suppose there is a bank. Let me give an example. Which name is XYZ. Okay. The bank is showing every year they are making 15% profit. Okay. They are showing that they had a deposit of rupees 20,000 crores. All right. They are showing that they had invested in government securities worth rupees 2,000 crores. This is their claim. Okay. Now, any person like me and you who is seeing this, who is looking at this bank, you can say XYZ, then we had only access to this data which they had provided in the normal people. Okay. But the question is, how you can check that whether the data is reliable or not? So it basically required the assessment of financial files of the bank. Then only we will be able to understand whether the bank is making the 50% profit, whether they had 20,000 crores deposit, whether they had invested in 2,000 crores. Okay. That's why regular audit is required. Suppose when the audit happened and then it is find out the bank is only making the profit of 2%. They had deposit for only rupees 10,000 crores. Okay. And they had purchased only government securities of 100 crores. This is the clear picture. And this picture is formed out after the completion of audit. When the audit organized, this picture was come out. Okay. So now we will be able to understand whether the bank is doing well or not, so that we could protect the depositors, the customers who had taken the loan, who had asked for the investment, or who even invested in the bank, and to protect the economy. And the fourth condition is to protect the shareholders. Okay, because it is very important. When the shareholders will try to invest in the bank XYZ, this data will also available for them. Okay, but instead of relying on this data, they will wait for the auditing data to find out whether the bank in which they are going to invest is actually making the claims or just, you can say, bumping their chest. Okay, that's why the regular audit is performed. An audit could not be done by any person. It required a person who is especially trained in this kind of things, and that's why chartered accountants or CA are generally preferred for it. Okay, and these are the external auditors. Now, what are the external auditors? So basically, auditing of the bank could be done by two types of auditors. Okay. The first one is the external auditor. The second one is the internal auditor. Okay. Now you will ask me, what are the external and the internal auditor? So let me tell you on just a overview, because about this we have a detailed point regarding these points. Okay. So basically the external auditor is the auditor who is appointed externally. He is not connected with the bank. He is not on the payroll of the bank, and he does not have any type of economical interest in the bank. That's why he is known as the external auditors. And basically, they are required to disclose the actual picture to people and the authorities. Okay, because they are not connected interestedly with the bank. They have only job. They only have a job to assess the files, and that's why they could do it independently and transparently. The internal auditors are basically appointed and employed in the bank, and they are required to disclose the picture in front of the management. Okay, so the top management of bank will come to know about how they are performing. All right, that's why the external and the internal auditors are appointed. Okay, now let's move forward. Now there is a appointment of statutory auditors. Okay, and this is very, very important. The appointment of statutory auditors is a crucial aspect of banking regulations. These auditors are typically chosen from firms or individuals approved by the Reserve Bank of India. Now, this is an important topic, and this is very, very important to have a clear cut understanding of this kind of topic. Okay, so basically, the first question which should arrive in your mind is that who are the statutory auditors? Okay, so basically, these auditors are prescribed in the BRA Act. Okay, and these are belong to external auditor category and appointed by the banks to audit their financial statements after a certain period of time with approval of the Reserve Bank of India. Okay, so they belong to the external auditors category. Okay, it means they are not internally hired, they are basically appointed from the outside, and these were appointed by the banks to audit their financial statement after a certain period of time. It means that after a particular year. Okay, after the approval of the Reserve Bank of India. Okay, it means that during the time when these are being elected, or sorry, when these are being appointed by the banks, during this time the Reserve Bank of India's approval is necessary before appoint them. Okay, so now if we talk about the eligibility criteria, what is the eligibility criteria on which they could be appointed. Okay, because it is very, very important. If the bank is appointed someone externally to audit their files and financial transaction, then it is very, very necessary that there should be a certain criteria for their appointment. Okay, so basically, the first criteria is the experience. Okay, so basically, the person who is going to audit the files, okay, must have experience of 5 years in the field of auditing the files and transaction of financial institutions. Okay, it is the first criteria that the firm or the statutory auditor who is going to be appointed by the bank must have at least 5 years of experience in field of auditing and auditing the files and transaction of the financial institutions. If the particular firm or the statutory auditor is not having the 5 years experience, which is the minimum criteria, then they could not be appointed by the bank for a audit files. Okay. The second criteria is that professional qualification. Like what should be the professional qualification the auditor or the statutory auditor must have. Okay. So basically, they must be a chartered accountant with 5 years of auditing experience in files of financial institutions. Okay, these are the professional qualification. Must be a chartered accountant with 5 years of auditing experience in fields of the financial institutions. Okay. Thereafter, the third one is that independency. Okay. What is the independency provision? So, the selected or appointed auditor must be independent of bank management and must not have any type of financial, economical, or personal interest with the bank. Okay. So it means that the selected statutory auditor must not be involved with the banking management in any form. Like suppose let me give you an example. This is the bank called XYZ. All right. They had appointed Mr. A as a auditor to audit their files. Okay. But Mr. A had rupees 10 crores investment in XYZ. So do you think that he should be appointed to audit the files of XYZ? No, because he already having the financial interest with the bank. Okay. So he could not be transparent, he could not be impartial. That's why it is to be ensured that the person or the statutory auditor or the firm which have been appointed by the bank after obtaining the approval from the Reserve Bank of India must be independent of the bank's management. They should not be involved in any type of financial, economical, or personal interest with the bank. Okay. And the last provision is that, which is the fourth one, and this is known as quality control. What is the meaning of quality control? Basically, the selected firm or statutory auditor must be adhere to quality of audit by following the prescribed rules and regulations. Okay, it means that any firm or a statutory auditor who is appointed by the bank for the audit must be able to follow the quality of the audit and even able to following the prescribed rules and regulations. Okay, and the last point in this is that must have clear past track record. What is the meaning of this? The particular firm, suppose if the bank is ABC, all right, and they had appointed XYZ. This is the bank. This is the statutory auditor. Okay. If this is the case, all right. So ABC has to ensure that the XYZ have a clear-cut record. It means that in their past years, they should not be involved in any kind of fraudulent activity, any kind of misleading activity, or they should not be punished by the Reserve Bank of India or any other regulatory authority. Okay, if it is happened, then the ABC could not sign a deal with the XYZ. Okay, that's why clear past record is very, very important. All right. So basically, students, in this lecture, we have discussed some facts about the audit and inspections. All right. I hope that these facts should become clear to you after this lecture. All right. In the next lecture, we will basically continue with the same topic and continue with the same point. It means selection of the statutory auditors. Okay. Till then, just revise the facts and figures I have provided you in this lecture so that you will be able in the next lecture to grasp the facts and figures properly. With this note, let's end this lecture and thank you.